William asks, Matt, how do you feel about the corporate rental market, where condos are identified in major business cities and units are strategically located near the commerce purpose that the clients would be seeking? Airports, city centers, interstates, etc. Rentals are typically 60 to 90 day type of use. Clients could be on a project or taking a job and have to start before the family can come. My understanding is that the costs for these small condos are typically in the $100,000 range, and they are totally furnished and move-in ready. They can do 30 to 90 day leases in the $1,800 to $2,200 range for short term. Do you see more potential for this type of rental versus single-family homes or apartments leased out to year-round tenants? Please expand on this concept and draw distinctions between the approaches. I have about $500,000 to invest with 50% leverage, could end up with 8 to 10 units worth around $1 million with gross revenue around $200,000 before expenses like management, taxes, repairs, and vacancies.
William, great question. My answer is that I love short-term rentals if I am the renter. Okay, I am staying in an Airbnb rental in Lisbon, Portugal right now. Last month I stayed in another one in Rio de Janeiro. These are, 4, 6, 8 week type of stays. Next month I will be staying in another one in Spain. As a renter, I love being able to pick out the property I want in the exact location in the world that I want and walking into a furnished rental. It is fantastic. However, your question was about being the owner of a short-term rental, and specifically a corporate rental that does 30 to 60 day rentals. And my answer to that is that I do not like those rentals as much as the longer term 12-month plus rentals of single-family homes, for example. And here's why. I have found, and I've owned, nightly rental units, I've owned condo hotel units and that sort of thing, in high demand sort of areas, in and around the Disney World area in Orlando, Florida, or those types of places. I've experimented with that type of asset. And what I have found is that the expenses associated with the shorter term rentals are so high that it makes the total investment, when you net everything out, to be less advantageous than a longer term rental of a single family home in an owner-occupied area of a high demand rental market. Okay, and let me talk to you about what I mean when I say expenses. Okay, first of all, the property management fee is going to be substantially higher. Okay, on my nightly rental units, the property management fee was at least 40% of the gross rent. And the reason is because they have to turn the unit over and clean the unit every day, and it's just a significantly higher expense to maintain and turn over the short-term units. And so your property management expense, whether it's a nightly unit or a short-term corporate rental or whatever, it's definitely going to be a higher property management fee per month, a percentage of your gross rent, than would be a longer-term, traditional 12-month lease in terms of what you pay for property management. Okay. The second thing that's going to be substantially higher is your vacancy rate. Okay, if you're buying a single-family home in a primarily owner-occupied area in a high-demand rental market, you're going to be able to attract high-quality tenants with stable jobs that have the intention of staying there for a long period of time. And so you might have a tenant that stays there for 3 years, 4 years, 5 years with no vacancy at all and no lapse in the rent at all. Okay, if you're renting out a short-term rental unit, your vacancy rate is going to be substantial. And so it's very important to look into exactly what a reasonable conservative vacancy estimate would be in the market that you're looking at for that type of a rental unit, because even though the price to rent ratio may on paper look pretty advantageous and pretty interesting and pretty exciting, when you get down to it and you subtract out a reasonable vacancy estimate, and then you subtract out your property management fee, and then you get down to the expenses associated with the property. And I can tell you that if it's a condominium unit, you're definitely going to have a homeowner association fee as well as your other fixed expenses, regarding taxes and insurance and all that kind of stuff. So you want to be able to conservatively and reasonably estimate all of those variables in. And what I have found is once you do that, and you project it out for what is this property actually going to put in your pocket over the next 3, 4, 5 years, I have not found short-term rentals to be as advantageous in long-term rentals in terms of what you're actually going to put in your pocket. So that's my answer.